Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. There are two main patterns here on this daily chart, and both are being tested right now, or have been tested right now. The first is a very shallow March to date based bear channel, currently 11.49 1/4 to 12.27 1/2, highlighted in bright green on my daily chart. It is not an ideal pattern, but it does fit in with the recent action just about. But it's been pressured with a breach below it, below the lower bright green bear channel line right now. It's not a break yet, it's just a breach. It is also below what had been some considerable congestion formed over March and early April between roughly 11.93 to 11.70. Thus we had some pretty good looking support below, and is now some pretty good looking resistance overhead. This has all been prompted by the weekly key reversal down made 3 weeks ago, which formed the peak of what could be seen as a small, if imperfect, head and shoulders top, or even a nascent diamond top pattern. This week, prices have moved below and established themselves once again underneath the green short medium moving average, currently 11.89, but have continued the move lower to start and establish themselves under the rising mauve medium moving average, which is currently 11.64 1/2. What is interesting about this week's move is the follow-on lower down to test the combination of December 2020 low at 11.43, and more importantly the dark blue lower time, currently 11.42 1/2, of what had been the consistent big picture item here, the dark blue December 24 to August 25 bullish Andrews pitchfork. This is the key overall pattern here, and it has been driving prices higher since August last year until now. This now leaves not only this pattern compromised, but it opens the way for a test of the gold long moving average below, which is currently at 11.18 3/4. First time since the start of January this year, as well as possibly, that's the first test of it since January this year, as well as possibly tests of that 61.8% absolute Fibonacci lines below that at 11.05 3/4, and the pair of 50% Fibonacci lines at 1100 1/4 and 1098. On top of all this, we now look at the whole of the March to date action as a possible wide double top Adam and Eve type. We have even today gone so far down that I feel obliged to lay out some targets below for this pattern, of a primary target X down at 11.14 1/2 zone, just under the gold long moving average, and a secondary harder to reach target X1 down in the 10.78 1/2 zone. This could be quite a large move lower, as there is limited supports below now, so watch this carefully. Chicago soybean meal. Since January, the market had been moving up nicely within the main pattern here, which was the bright red late September 25 to mid-January 26 bullish shift pitchfork. However, day before yesterday, we tested the bright red lower time, currently at 319.60, closing right on it, and yesterday we breached down below it, breached it quite considerably on the downside, the first time since a brief breach lower back in early February. Now looks like this bright red bullish pitchfork, which had been so good at showing the bullish angle of attack of this market, it looks like its days may be coming to an end. Additionally, yesterday prices pushed down below the mauve medium moving average, currently at 315.70, and are now testing the congestion between 309.40 to 311.20. This will be the first major test of this move lower since the breach of the pitchfork. If this congestion is breached or broken, we closed above it, remember, we breached it, but we closed above it. If it's properly breached or broken, then the next support is not too far, and that's the flatlining gold long moving average, currently at 306.70, with the 50% Fibonacci line of the 2025 to date move at 302.10 next after that. Below this, well, apart from the congestion from January this year between 293.5 to the 50% Fibonacci line at 302.10, well, there is nothing much. And I should say, with the overhang of the market since February this year, I could easily see that being tested. This leads me to my final point, and this commentary would not be complete without my discussing a portion of my commentary which I've been repeating here for 157 weeks. So for 3 years now, it is the annual key reversal seen here at the end of 2023. I said back then, and I quote, "And I only need to remind you once again of my words when I pointed out the Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023. I've been living in the shadow of this pattern ever since." End of quote. I've also added ever since, and I quote, "If there's only one thing you take away from any of my musings, let it have been those words." For 3 years, the shadow of that pattern has darkened the skyline of this market ever since. I wondered if prices were now finally exercising that shadow. Right now it seems not, so please bear in mind we are still significantly below the close of 2023. Chicago soybean oil. There is one pattern here that has defined moves higher this year, even when it was and is being thoroughly tested. It is the bright pink March to August 2025 bullish Andrews pitchfork, with the market resting on the bright pink upper tine, or round about the bright pink upper tine, currently 75.02. We had broken up through this pink upper tine 5 weeks ago and then dipped back below it, then over it, now back down towards it. This breach higher prompted me 2 weeks ago to draw a dark blue mid-March to mid-April bullish Andrews pitchfork. This has also seen a breach higher 4 weeks ago on the upside and another last week on the downside, both seemingly repaired. For a while, the market was being caught and squeezed between the bright pink upper time, which was then overhead, currently at 75.02, and the dark blue rising lower time below, which is currently 74.67. And in this process of being squeezed, the market created a weekly key reversal up last week, but one that we have not seen any follow through higher, though we are still within the upper half, just about, of last week's range. This leads me to another development which I've drawn today, a bright red mid-April to late May bullish Andrews pitchfork. The market sitting a little above the bright red lower tine, currently at 74.27. Now, I would be happy to finesse this bullish Andrews pitchfork to a shallower bullish shift pitchfork should the needs arise, but I would like you to consider something should that happen. Would such a move effectively lower, the market moving lower, be the precursor to making the whole late March to date action become a possible double top? You see, it might just do that. However, to counter that, I would like to bring back to something I spoke about 5 weeks ago, when I said, and I quote, "Last week," so that's now 6 weeks ago, "last week prices broke up through what seems to be the top of the hesitation part of the halfway hesitation, specifically the congestion between 68.71 to 69.12. Made the March action into a hesitation part of a very large bullish halfway hesitation. This leaves us now, excluding the idea of an ascending triangle pattern, with a few distinct possibilities for a bullish halfway hesitation. Thus, if we measure from the start of February low, then we have a primary target X up in the 75.40 area, so not too far above, and a harder to reach secondary target X1 up in the 82.10 area. If, however, we measure from the deeper December 2025 low, then we have a primary target X2 up in the 78.45 area. I'll be interested to see how, and a much harder to reach secondary target X3 up in the 87.20 area. I'll be interested to see how the market deals with these potential targets. And that's the end of the quote. Well, 4 weeks ago, prices reached the first, easy, primary target X at 75.40. And this week we have seen, or have been close to the other primary target X2 at 78.45, though we have not reached it as yet. This still leaves target X1 and X3 still open. I think for this market the question for the coming week is whether the market is, for the overall market for this coming week, is not whether the market is bullish or not, but how bullish does this market choose to be. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.